This morning we can see a perfect example of how the new traders and inexperienced traders can really get nailed. So just overnight, since I went to bed and got back up, Bitcoin has made a potential 1, 2, 3 bottom formation that was very inviting. A lot of people might have jumped in right at this moment. Let's say 10,000 people bought one Bitcoin right here for easy math. We can see prices have gone down more than $1,000 overnight. So those 10,000 people would have lost, say, an even $1,000 each. That's $10 million. And so it's very worthwhile for the artificial intelligence bots to be looking for consolidations like this, watching for when people are putting on their longs with their stop losses far too close to the market, far too close to the market, far too close to the market. And to hit all of those people is a quick $10 million. And it's worth it to have hundreds of millions sitting there waiting for just the right moment to nail all of the new traders. So there's a conspiracy theory on what we're going to be seeing a lot more of now that we have Bitcoin futures that allow these traders to put on $1 million here and highly leverage it. It turns into $100 million, and they can really push the markets around. We're still inside this longer 1, 2, 3 bottom, and with a longer perspective and a belief that you need risk control rules, then an experienced trader may have also seen this chart pattern and tested it with a very small bit of their position. And then as soon as they are not proven correct, doesn't matter if it's going sideways, it has to prove you correct, they close their position. And so they would protect themselves against this kind of devastating loss because of the very light foot, knowing how risky trading always is. And especially nowadays with the artificial intelligence bots, I think that all trading is very much more risky. And every new trader really has to step back and take an investor's approach with a very small amount of money, so that you can let it ride over a period of time without sweating about these kind of moves that are happening in Bitcoin and in silver and gold as well. Another important fact is that an experienced trader doesn't get married to one side of the market. They are not always just buying low and selling high. They are quite willing to flip this chart upside down and look at this pattern as though it is the signal to take an action on. So there, that moving average crossover is the place to go short. And we can see that that has bared out to be true. And if we expand this out over a longer period of time, we can see on the 1 month view and the 3 month view, we're still in a downtrend. There has been no trend change reversal that's strong enough to show that it's time to go long. Instead, history has shown that these kind of pumps usually trace back at least to the 50% level where we are, and may be going down for quite a long time. Just as long as it took to go up, it could be going down the same amount of time before flattening out for a long time before we see the moving averages cross over to show us that the momentum has changed the other way. But for now, the moving averages are nowhere near showing us that the momentum has changed to be back into a bull market.